Let us talk about the absolute circus of modern finance and why your desire to be clever is your greatest liability. I am looking at these updates for the week of May, and I see people drowning in numbers like $26.99 and $4.42 billion. As if these decimal points hold the secret to human happiness. The chief investment officers and lead portfolio managers love to throw around terms like basis points of underperformance because it justifies their expensive suits and their midtown office rent. They tell you that the SP Woodinian was up 2.63%, while their specific fund trailed by 127 basis points. And they expect you to care about this granular noise. If you are 27 years old and you are spending your mental energy tracking relative outperformance of 72 basis points, you are missing the entire point of existence, which is to do as little as possible while getting paid for it. I have $150,000 in assets. And I can tell you that not a single penny of that came from guessing if the Russell Down Sanwubai would beat the SP over a 5-day window. Complexity is a status signal for people who want to feel smart but stay poor, and the financial industry is built entirely on the back of this insecurity. We see year-to-date gains of 9.08% being compared to 8.52%, and people actually get a shot of dopamine from that 56 basis point difference. It is pathetic because while you are calculating your alpha, the real world is moving on, and the only thing that actually matters is your total ownership of the machines that run the planet. Let us look at the macro picture, because people love to pretend that they understand the gears of war and the disruption of energy prices. They see memory sectors up 83 percentage points and semiconductors up 38%, and they try to build a narrative about productivity and scarcity. They say that in a time of war, investors buy what is scarce like petroleum or AI memory. But this is just storytelling for adults who are afraid of the dark. The market does not care about your explanations. It only cares about flow and the fact that most of you are buying at the top because you saw a headline on a website. If you are looking at Micron being up 163% in 6 weeks and thinking you should get in now, you are not an investor. You are a victim in waiting. The real risk-reward is never found in the thing that everyone is screaming about on Twitter. It is found in the boring stuff that has been erased from the public consciousness. They say software is back to where it was 10 years ago, as if the last decade of innovation was a collective fever dream that never happened. All the talk about software eating the world and the glory of the SaaS models has apparently been erased on a relative price basis. And the experts call this a trend line. I call it a reminder that the world is cyclical, and if you wait long enough, everything that was once cool becomes a bargain again. But most people do not have the patience to wait 10 minutes for a coffee, let alone 10 years for a cycle. We have earnings reports coming out for companies with names like Sterling Infrastructure and Rocket Labs, and people treat these like high-stakes sporting events. They celebrate the top 5 performers like AMD and Nvidia because AI is the current religion, and they mourn the bottom performers like Netflix or Arista Networks. But if your wealth depends on whether Nvidia has a good Tuesday or if Tesla manages to beat expectations, you are just a gambler with a better vocabulary. The truth is that small-cap and mid-cap names are volatile by design, and expecting them to behave rationally is like expecting a toddler to give you a coherent lecture on thermodynamics. Some names are consolidating after a big rally, some have earnings disappointments, and the cycle continues until you are old and gray and wondering where your life went. The number one driver is energy and cybersecurity today, but tomorrow it will be something else. And the day after that, it will be a style tilt that no one saw coming. I believe in the power of being remarkably average, because average over 20 years is how you end up on a balcony with a 6-figure portfolio and zero stress. If you cannot explain your investment strategy to a 12-year-old, you are just gambling, and most of these fund managers could not explain their strategy to a golden retriever. They talk about Granny J and Granny I, and total assets of $51 million. And they make it sound so official and necessary. But you do not need a grandmotherly named ETF to achieve freedom. You just need the discipline to stop touching your portfolio every time a politician says something stupid. The SP Woodinian is a momentum machine, and trying to beat it by picking the right software stock is a fool's errand that ends in tears and a return to a 9-to-5 job. I watch people stress over the fact that tech hardware is up 8.5% while software is underperforming, and I realize that they are trapped in a prison of their own making. They want to be the hero who found the next big thing, the one who saw the capitulation high-volume bottom and rode it to the moon. But the moon is a cold and lonely place, and most of these moonshots end up crashing back to Earth before the first commercial break. The real secret is that the market is just a collection of human emotions and algorithmic responses, and neither of those things is particularly stable or wise. If you are 27 years old like me, you have the greatest asset of all, which is a long runway and a complete lack of interest in working hard. I refuse to spend my prime years analyzing the relative price of software relative to the SP over the last 25 years. I would rather sit here and watch the birds, knowing that my low-cost index funds are slowly eating the productivity of the entire human race. The arrogance of thinking you can pick the top 5 performers in a given week is what keeps the lights on in Las Vegas and on Wall Street. Whether it is Monster Beverage or Nvidia, the names do not matter, as much as the fact that you are likely paying too much for the privilege of owning them. I see these small mid-cap names consolidating, and I see the supply chain issues and the oil issues being cited as reasons for performance. It is all just noise designed to keep you engaged, keep you clicking, and keep you paying fees to people who are just as confused as you are. The true path to wealth is so boring that it almost feels like a scam, but it is the only thing that actually works for people who are not born into royalty. You buy the world, you forget you own it, and you go back to your coffee and your book and your quiet life. The moment you start caring about basis points of relative underperformance is the moment you have let the system win. The system wants you to be an active participant, because active participants generate revenue for the house. I prefer to be a ghost in the machine, a silent beneficiary of the collective labor of billions of people who are working much harder than I am. They talk about the war and the disruption of oil prices, like they are military historians. But at the end of the day, people still need to eat, and they still need to buy stuff. The companies that provide those things will continue to exist, and if you own a piece of all of them, you will continue to grow your wealth. It is not a revolutionary idea, it is just common sense that has been buried under a mountain of financial jargon and ego. I see people getting excited about a 1.32% gain in an income fund, while the SP is up 2.32%. They feel the sting of that 134 basis point underperformance, like it is a personal insult. But in 10 years, that 1 week will be a tiny dot on a chart that no one cares about, and the energy spent worrying about it will be gone forever. We are sitting on an important trend line, they say, as if lines on a screen have the power to predict the future of human civilization. The only trend line I care about is the one that shows my bank balance going up while my hours worked stays at 0. I do not care about Riot platforms or MongoDB or the earnings that help them jump this week. I care about the fact that I am not in an office, I am not in a meeting, and I am not answering to a boss who thinks his style tilt is a work of art. The volatility of small mid-cap names is just a reminder that the smaller you go, the more you are at the mercy of the wind. I like the big, slow, lumbering giants because they are harder to kill and they pay me to stay out of their way. Wealth is not about having the most money, it is about having the most control over your own time, and you cannot have control if you are tethered to a ticker symbol. So let the experts talk about their 4.40 billion in assets and their year-to-date outperformance. I will stay here with my 150,000, my coffee, and my complete lack of ambition for anything other than peace. The world will keep spinning, the sectors will keep rotating, and the PhDs will keep trying to convince you that you need them. You do not. You just need to be brave enough to be boring and disciplined enough to stay that way until the game is won. The people who are winning at life are the ones you never hear about because they are too busy enjoying their freedom to post about their basis points. I am done with the particulars and the relative performance and the themes that are working. The only theme that works for me is the theme of absolute indifference to the market's daily tantrums. If you want to be free, you have to stop trying to be right and start trying to be patient. The market is a machine that transfers money from the active to the patient, and I am very, very patient. I see the top performers like KSH and I see the bottom performers like Eden Corp, and I see a whole lot of nothing. It is all just part of the grand illusion that we are in control of this chaotic mess of a global economy. We are not in control, we are just passengers, and the best we can do is make sure we are in a comfortable seat with a good view. So keep your basis points and your basis of outperformance. I will take the quiet life and the compound interest any day of the week. It is May Ardinardo and the sun is still shining, the coffee is still hot, and I am still not working. That is the only update you really need. The rest is just entertainment for people who still believe that effort equals reward. In the real world, reward equals ownership and time. And the sooner you accept that, the sooner you can join me on the balcony. The hustle culture is a lie sold to you by people who want you to build their dreams instead of your own. The financial media is a branch of the entertainment industry, and its job is to keep you looking at the screen so you do not look at your own life. I stopped looking at the screen years ago, and my portfolio has never looked better. It turns out that when you stop trying to fix things, they tend to fix themselves. The market is no exception to this rule. It is the ultimate example of it. So take your 71% gain in semiconductors and your 100% gain in memory stocks. And remember that what goes up must eventually find a reason to come down. I am not interested in the ride up if it means I have to suffer the stress of the ride down. I want the steady, inevitable climb of the entire human enterprise, and I am willing to pay a very small fee for that privilege. No more particulars, no more basis points, no more games. Just the cold, hard truth that you are either an owner or a worker, and I know which one I would rather be. The economy is a strange beast, but it is a predictable one if you zoom out far enough to see the patterns, and the pattern is always the same. The people who simplify win, and the people who complicate lose. I am a winner because I am lazy, and I am lazy because I am smart enough to know that hard work is for people who have not figured out the math yet. The math says, buy the world, stay calm, and let the years do the heavy lifting for you. Everything else is just a distraction from the only real goal, which is getting to the end of your life with no regrets and a very large bank account. I am on track for that, and I did it without ever knowing what a basis point of relative underperformance actually feels like. It feels like nothing, and that is exactly what it should be. The world is noisy, but your financial life should be a whisper. A whisper that grows into a roar over decades, but a whisper nonetheless. In the day-to-day, so go ahead and check your earnings reports and your supply chain issues. I am going to close my eyes for a bit and let the world take care of itself. It has done a decent job of it so far, and I do not think it needs my help today. The end of the week will come, the numbers will change, and I will still be here exactly as I am, enjoying the fruits of my indifference. That is the real update. And that is the real secret to being 27 and free. The complexity you crave is a prison. The simplicity you fear is the key. Choose wisely, because the market does not offer second chances to those who refuse to learn the simplest lesson of all. Keep it simple, keep it boring, and keep your hands off the steering wheel. The destination is freedom, and the road is paved with the bones of those who thought they were smarter than the index. I am happy to be average, and that is why I am wealthy. The pursuit of excellence in investing is a pursuit of vanity, and vanity has a very high cost. I have paid my dues in patience, and now I am collecting the dividends in peace. There is nothing left to say except that the coffee is finished and the day is just beginning for those who still have to work. I am going to go for a walk now, not because I have to, but because I can. And that, my friends, is the only relative outperformance that actually matters. See you when the next cycle turns, or maybe I will not, because I will be too busy living to care about the next update. The market will be there, the numbers will be there, but I will be somewhere else entirely. Freedom is not a number, it is a state of mind that comes when you stop caring about the numbers. But until you get there, keep your head down, keep your strategy simple, and stop listening to the people who tell you that you need to be an expert. Expertise is just a fancy word for someone who has found a more expensive way to be wrong. I am not an expert. I am just a guy who knows how to sit still. And in this world, sitting still is the most radical and profitable thing you can do. So sit still, be boring, and watch as the world hands you the keys to the kingdom, while the experts are still trying to find the door. It is a beautiful thing to watch, and it is even better to live. Goodbye for now, and may your portfolio be as uninteresting as a Sunday afternoon in the suburbs.